So I think I'll just outline what is a stock exchange for those who don't know what a stock exchange is. And I also talk about the difference between ZSE and VFX, investment opportunities, performance, benefits, and challenges. So I'll just explain as I go along. So I think a stock exchange is a regulated marketplace where financial securities are bought and sold. So I think it's important that we understand that's where financial securities. And financial securities are defined under the Securities Exchange Act. The ZSE itself, is a regulator, but what's more important that it's regulated by the Securities and Exchange Commission. So it's licensed. So the Zimbabwe Stock Exchange is licensed under the Securities Act in terms of I think Securities Exchange Act 425. And its core mandate is two ways. It facilitates long-term capital raising through listing of securities, which we call the primary market, where companies come in to raise money. Then those securities, once the money has been raised, what's called the secondary market, where people can buy and sell to each other, the trading side of it. And the way the exchange comes in is the regulation of those services. The Federal Stock Exchange is a subsidiary of the Zimbabwe Stock Exchange. And its intention was to kick off the Offshore Financial Service Center. There is some legislation that was done around the Offshore Service Center. There's an SI that declares the Trade Force area as an Offshore Financial Service Center. And also there is in the Finance Bill of 2021, I think, explains how the process of getting that started. The two exchanges have got the following financial instruments that can be traded. There's shares or equity, those are ordinary shares in the company. There's depository receipts. So depository receipts are shares of a foreign company that are then put in a trust. That's why then subdivided. They're called depository receipts. Fixed income instruments, I think most of us know it as debt, but it's called fixed income because it pays a certain percentage regularly. Then there's exchange and traded products. The main one that we know is ETFs that are traded on the Zimbabwe Stock Exchange at the moment. Then there's real estate investment trusts, which is a relatively new concept that we are promoting. It's very important because it allows companies to raise money, or organizations to raise money for infrastructure, and it's quite tax friendly. And also it's very good for investors as well, because at least 80% of that income has to be paid out as dividend. So a real investment trust is a new concept that is quite friendly. Then there's what we call contract for differences. I think it's well known. I think among the young people is some of it is I think they call it forex trading, but it's beyond forex trading. It's a product that we are close to offering on the Terraforce Stock Exchange, but I'll explain in detail on that. So I think what's important on this page is to understand that we're a well-regulated platform, even though we are regulated ourselves, but we are regulated, and that we offer financial instruments as defined by the Securities Act. Okay, so the difference between ZSE and the Terraforce Stock Exchange, the main difference that people know is the currency used. So the Terraforce Stock Exchange trades in hard currency. At the moment, we are trading in United States dollars because that's the prevalent hard currency in the country. But nothing stops us in the future to trade in other currencies as well, as long as they are freely tradable. So that's what is important. The ZSE trades in local currency, and the fees on the VFX are lower at the moment. And also what's important as well is there's no capital gains tax if you buy and sell shares on the Federal Stock Exchange. And also the dividend, withholding tax for dividend for investors is lower at 5%. So in our minds, these are two different platforms put together, aiming for two different things. The Federal Stock Exchange, as I said earlier, is part of the International Financial Center. It's almost like the beachhead for the International Financial Center. We all know the challenges, and I'll talk to that at the end. The challenges of investing in Zimbabwe, including foreign currency shortages. So the VFX was done in such a way that it's easier, especially foreigners, to come in and go out. Also, I think it's easier for companies as well, I think, in terms of reporting and everything. But I'll explain later on in detail why the VFX was formed as a way of going around some of the challenges that we face in the country. So in our minds, they are complementary. I know that there's been some disquiet on the movement from ZSE to VFX. in our minds that it has been more like giving companies an option to be one or the other. But for us, VFX was done to attract new companies altogether. And we're quite happy at the moment in the companies that we have, the number of companies that we have attracted, and the type of companies that we've attracted as well. And we believe that given our pipeline, we see significant growth on the Victoria Stock Exchange. But I'll explain as I go along. So in terms of companies that are listed, if you want to buy shares on ZSE or VFX, equities, there are 49 on ZSE, 18 on VFX. What we like very much on the companies that are on our platforms are companies that affect almost everyone who is in Zimbabwe. What you buy, where you buy, what you buy, your phone, everything. I mean, we have some of the biggest companies in Zimbabwe listed on our platforms: Delta, Econet, OK Zimbabwe, Bank, CPZ, FBC, just to name a few. So there is whatever you do in Zimbabwe, you're most likely doing it through a companies listed on the ZSE or on the Victoria Stock Exchange. And that for us, I think, is one of the biggest attraction of investing on our stock exchange. You are exposing yourself to some of the best performing companies, some of the biggest companies in Zimbabwe. Then we also have ETFs as well. So ETFs are a group of it's a group of listed company shares that are put in a vehicle. So when you buy 1 unit of ETF, you're not buying one share, you're buying like almost multiple shares at the same time. The reason why we like ETFs is that it's very good for diversification, and it's easier for someone who doesn't know what to invest in first, and therefore comes in on an ETF. So, for example, we have a top 10 ETF. So if you don't know which company to invest in, when you buy into that top 10 ETF, you are automatically exposed to 10 of the biggest companies on the Zimbabwe Stock Exchange. So that helps very much in terms of knowing what to invest, and also in terms of diversification as well. So this is a relatively new concept on our exchange. It's about around 3 years old, and we're quite excited about this. ETFs are very common internationally. It's a concept that as we go bigger on the exchanges, you will see more and more. Then I touched on the REITs. The REITs that we have is called Tigere, which is the Highlands Park shopping mall. So basically, if you own units on Tigere, you own shares in the Highlands Park. So that helps quite a lot. What we like about REITs is that normally in a normal company or a normal property company, you as a shareholder, you get taxed almost twice, indirectly and directly. So your company gets tax, pays company tax around 29%. Then when that money flows to you, there's also a withholding tax paid as well. So the REITs is that if a company is a REIT and pays at least 80% of its profit as a dividend, then it doesn't get taxed. So which means that as an individual, you are getting more money into your pocket. And also because these companies have to pay 80% of their income as dividend, there's more money that flows to you as well. So that is the double part of it. You are getting more money and it's being paid. You're exposed to more money because there's less tax and you get more money being paid regularly. So that's why REITs are very popular. They've done wonders in South Africa. A lot of the shopping malls and the buildings in South Africa were done through REITs. So we are very bullish that as people get more comfortable on REITs, that's something that's going to happen very much on the exchange. The other part as well where we think REITs will make a difference is in terms of pension funds. So we know our pension funds, some of their money they invested on stock exchange, some of it is in terms of buildings. So what happens is sometimes that they can't pay out people who have retired because their money is in buildings. So if they were to list that building as a REIT, they can do one of two things. They can either give their pensioners units in the REIT, or they can sell some of the units in the REIT and then pay the money out to the people who are retired. So we believe that there is plenty of opportunity for pension funds to take advantage of REITs. We have 2 or so pension funds who are in the pipeline in terms of coming on the REIT in the market. And also the other thing is, besides the issue of retirees as well, we've noticed that sometimes the pension fund buildings are in bad condition because the pension fund doesn't have money work on the building. So I think it also helps as well, because you can bring in investors without necessarily selling the building. Then in terms of bonds, we have one on the Victoria Falls Stock Exchange. This is something where we are not as good as other African countries. A lot of African countries have a lot of bonds, especially government bonds. In Zimbabwe, we haven't managed to get the government to issue bonds on the stock exchange. There's one that is in the pipeline that has taken a bit of time. But if you look at exchanges like in Botswana, Malawi, the government comes quite a lot to raise money through the exchange. So it's something that we're trying to work with the government as the best way to raise money to come through the exchange. Then I think in terms of new opportunities, so besides the current companies that are on the exchange, we have a strong pipeline of companies that are coming through. We're expecting 2 or 3 IPOs this year. So I think my worry maybe it's because it might spill into next year, but we like our pipeline both on the ZSE and on the Victoria Falls Stock Exchange. So on the ZSE, as I said, we're expecting about 2 REITs that are pension related to come onto the exchange. Then on the VFX, we have a few export companies that want to raise money that are looking for IPOs that will be coming through to the Victoria Falls Stock Exchange, including 1 or 2 REITs and ETFs. So we're quite bullish in terms of the pipeline that is coming through both exchanges. But in terms of new things completely that are coming on the Victoria Falls Stock Exchange is the Minerals Commodity Exchange and the Contract for Differences. So the Mineral Commodities Exchange is that there will be an exchange in Zimbabwe on the Victoria Falls Stock Exchange where the minerals that are mined in Zimbabwe can be bought and sold. And we are now in the final stages in terms of the legislation around it. And this is going to be a new industry almost being created in terms of the commodities exchange. And there'll be a lot of opportunities in terms of provision of warehouse, in terms of being a participant on that market. So there'll be new type of brokers or middlemen that will be coming through in terms of financing, because the Mineral Commodities Exchange makes it easier for miners to raise money. So we expect this to be an area where there's going to be a lot of opportunities for people. So I think if you're interested when this comes out, just be on the lookout. There's going to be a lot of new opportunities that's going to come on the Minerals Commodity Exchange. Then in terms of contract for differences, which I spoke about, that is what young people call forex trading, but goes beyond forex trading. And the reason why we've done that is that we have noticed that there's a lot of people that have lost money playing on the contract for differences, because a lot of people offering this are foreigners that aren't regulated in Zimbabwe. And also what we've noticed as well is that a lot of money flows out of the country. So as money, so people, when they play on the contract for differences, they put money on the card and then straight away the money leaves the country. So we have come up with the rules around the contract for differences. We have brokers that are ready to offer this. So over the next month or 2, we'll be offering contract for differences in Zimbabwe. So at least people's money will be safe around this. So I think these are the 2 completely new opportunities that we have in the pipeline. But most exciting for us is the Minerals and Commodity Exchange. This is almost creating a new industry and will require new participants and warehouses. It will be a new opportunity for everyone, including the miners themselves. So I think be on the lookout as we talk more and more about this. Something that you can participate. Because it's something that is completely new. And in terms of this, I think we're one of the few countries in Africa that will have a Minerals Commodity Exchange. So I think we're quite excited about this. Then I think in terms of performance to date on VFX, so in terms of the all-share index, it has dropped by 30%. So the anomaly on the Victoria Falls Exchange is most of the companies that traded on the exchange were migration from ZSE. So the challenge that we had on the migration was that you have to migrate on an official exchange rate. And we saw that there was a lot of almost re-rating that would happen that was closer to the parallel market rate when the companies moved over to the VFX. So it's something that we think was temporary, and we are bullish that as things go along, these companies will start increasing in value. So we are comfortable with what happened. We think it was once off because of the re-rating that happened in the movement from ZSE to VFX. We're quite excited that the turnover has gone up. The volume might not be, but the turnover, we're happy with it. The number of trades has gone up, and the market cap in total has gone up. I think what most people underestimate is how difficult it is to start an exchange generally, and to start an exchange, particularly in Africa. So I think when we talk to other exchanges in Africa, I mean, they're quite surprised how much we've done with this exchange in a short period of time. So we're comfortable in terms of where we are, and we are even more comfortable when we look at the pipeline that we have that is coming through. I think for a while, Zimbabwe didn't have IPOs, but I think it's becoming more and more regular for new companies to come on the exchange. And I think that is what you need. Because in Africa, most of the time when there's IPOs, it tends to be government companies that are privatizing. And what we are seeing on our exchanges is not government companies privatizing, but it's individual or companies that are coming, private companies that are coming. And a lot of to do that coming on VFX has to do with the currency stability. It's a pity that we've taken us a while to get our currency stable, and we're grateful that we are getting there now. But we see that every time there's currency stability, that's when you get more capital raising on ZSE. But VFX, because the currency is stable, we believe that we'll get more capital raising in future. Then in terms of ZSE, you see the growth in terms of the numbers. 646%, turnover has gone up. Volume is a bit static. Number of trades have come down, and market cap has gone up. Part of it, we have to admit, has to do with the movement of the currency, why the market has gone up the way it is. So I want to talk about the benefit of stock market to the country as a whole. I've always felt on a personal level that people don't understand the importance of the capital market or stock market to a country as a whole. So I think the first part I want to talk about is one in the middle in terms of attracting foreign investment. So when you're a foreign investor, the way an exchange of a country looks like is very important. The way it has grown, the rules surrounding it, as well as its sophistication. So the better that things are, the more you think that a country is good for investment. And most people, when they want to invest in a country, they start on the stock exchange first because they're more protected. They come in and out and see whether they can get their money in and they can get their money out. Once they're comfortable with that, then they tend to look abroad to see where they can do. But it's very important, a stock exchange, in terms of attracting foreign investment, because most investors who don't want to be involved in the day-to-day activities of a company, it's easier for them to invest through the stock exchange because that's where they are protected. And as a result of that, there is more increased economic growth. Also, we spoke about it in terms of increased capital formation. It's the place where people with surplus money are able to bring in their money, and those with who are looking for capital come and raise the money. So the better you are at doing this, the more you can increase capital formation, you can increase economic growth, and also promotes financial inclusion as well. I was talking about the Tigere rate, for example. There are not many of us who have enough money to build a shopping mall. But because shopping mall is listed on the exchange, you can participate as an owner of that shopping mall, although it's small percentage, but you are an owner of a shopping mall, and therefore you can be an investor and an owner of a shopping mall, and that helps very much in terms of promoting financial inclusion. And because companies that are on the stock market are regulated, their corporate governance is better. So generally, it promotes corporate governance in the country. So the stock market is very important in terms of economic development and economic growth of a country. And so I emphasize that I think it's something that is lost I think in Zimbabwe or in Africa in general. I think people just look at the in and out of it, but it does help very much in terms of growing the economy of the country. Then in terms of a company, so we believe that companies have taken advantage of an exchange in terms of their growth, in terms of capital raising. So it's easier to raise money on the stock market. So you can go to the bank, yes, but bank money comes with its own conditions and all that. But if you're raising capital on the stock market, that way you do not have some of these conditions that comes with going to the bank. Also, employee attraction as well. Employees tend to be more attracted to companies that are listed. In terms of business attraction, if someone wants to trade with you, they know you are listed, then they know that there is a minimum amount of corporate governance and financial performance that comes with it. So you tend to attract people better, and especially when you are dealing with foreigners. If they know that you are listed, it helps a lot. Banks as well. We've seen companies that are listed on the stock market having better interest rates than they had before, because now the listed banks are more comfortable with them. And also one other thing that is underrated, especially by companies, is exit route for shareholders. So most people start companies as entrepreneurs and they work hard for it. And there's a general expectation that your children also will be interested in the business, which is not necessarily the case. Also, there's a general expectation as well that your children are as good as you are in terms of running those companies. That may not necessarily be true. So if your company is doing well, listing it helps a lot for the shareholders, because at least you can diversify in terms of you can get more professional management. So I think that is also something that is not understood by people who start their own businesses. And also there's a max as well in terms of listing on an exchange. So if you are making, let's say, $10 million a year profit, when you list on a stock exchange, normally you list a value of your company is multiple of that. Let's just make a number 8 times. So you list your company as $80 million. So automatically your wealth is almost increases because of listing on the stock market. So there's a mates element that comes listing, because you get your valuation goes up in terms of multiples of your profit. So I think something that is lost on the stock market. And the other things that we didn't see as well is almost free advertising. So if your company is listed, it's talked about on TV, it's in the newspaper. So there's a lot of free advertising that comes in terms of listing on the stock market. Then I think in terms of investing, so when people make money, they look at ways to invest. Some invest in property, but I think you should consider as well investing on the stock market. There's potential for high returns. Historically, stock market has outperformed other classes. Dividends, most good companies pay dividends, so your money is not just sitting there. You know there's capital growth that comes with buying shares, but also you get income as well. There's diversification. You can't put all your eggs in one basket, so it's important to diversify, and you can diversify even more on the stock market, because the stock market has got companies across all sectors, manufacturing, agriculture, mining, so you can diversify. But the other thing that is underrated is liquidity. So in life, you can be wealthy, but not liquid. Liquidity means the ability to go in and out without making a huge loss. So it's easier on the stock market to come in and out, because you can sell your shares and you get your money in 3-4 days. So that is underrated, because everyone knows we know a lot of set cases where people have got assets, but they were forced to sell them at a big loss because they needed money for emergency. We know people that have gone to loan sharks, ended up losing those assets because they wanted money urgently. So you must always look in terms of diversifying liquidity. I think I always think liquidity in Zimbabwe is underrated. It's important that in terms of your wealth, you have some items that are liquid. You never know when you need money. And stocks tend to be very good in terms of liquidity. And also there's flexibility as well. You can do stocks, you can do ETFs, you can do REITs, you can do bonds. There's a lot of flexibility that comes in terms of investing on the stock market. So if you've got excess funds and you're looking at where to invest, I think you must consider the stock market as well. And we have about 22 brokers that you can work with. They are on our website. So if you go on our website, you'll see that we've got about 22 brokers that you can work with. And a lot of those brokers will help you in terms of which asset, which stock to buy. And also a lot of them actually send out free information as well in terms of stock picks, in terms of comments on the economy. So you can get a lot of free information if you work with those stock brokers. If you are an expert, you can use our platforms. We've got the platforms ZSE Direct and VFX Direct, so you can come in and use those platforms. So I think if you've got excess funds, we think that you should consider investing on the stock market. So I think in terms of challenges faced by the capital markets, we are not immune in terms of the challenges faced by the capital markets, economic instability, perceived country risk, foreign currency shortages, perceived inconsistent policies, and relatively low financial literacy. I think in terms of what makes me sad mostly is the low financial literacy. And I think it's something that we try, not just us, but our regulators as well, for people to understand what is stock market, how it works, how you decide what to invest in. So it's something that we are continuously working on. I'm quite excited that I think the younger people, I think their knowledge, I think is probably better than where I was when I was young myself. But in terms of the top parts, the economic stability, country risk, and everything, I would believe that the international financial center or the offshore financial center will help in terms of that. It's something that the Minister of Finance is very keen on to start. And as I said before, VFX is one of the has been one that has started the offshore financial center. So we believe that we can find a way of, for lack of a better way, insulating the capital markets through the international financial center. And as we work on that, I think we'll be giving out more information on how this is going to work. As I said, I didn't want to talk for a long time. I think I'll just leave it out for questions so that we can make it a discussion rather than me continuing to talk. So I'll open up now for questions.
So if you are a lady in business who owns, runs, or leads an organization, a company within this country, the only premier foremost event which you can't afford to miss is the Women in Enterprise Conference and Award.
ZNCC, the voice of business.
Okay, so the pressure that we have is to get it done this side of the year, but I think realistically, probably we're thinking very early next year, Q1 next year. I think realistically has to manage expectations, but we're trying very much to do it this side of the year. But I think to manage the expectations, latest first quarter next year. So we've done quite a lot of work. We've been working on this for almost 2 years now. So we've done quite a lot of work. Yeah.
That's okay.
Okay, all right. So what we have noticed, and I haven't done a scientific study on this, but what we have noticed that people have taken their investment on VFX as their long-term assets. I don't know if that makes sense. I mean, there was a gentleman who I was talking to who said to me, Justin, my shares in VFX are my retirement funds. So what we have noticed that people have taken that is their long-term assets, which is not ideal for us because we would want more trading in and out. And we also think that I think it's a matter of people being comfortable in terms of investing in and out of it. So what happened is initially when we had a few quality stocks or few stocks, people would say, if I sell, what else do I buy in? So as you increase your number of stocks, your liquidity also goes up as well. Because now you are saying to yourself, if I move out of this counter, there's another counter that I can move into. I think the third aspect, I think, is in terms of information. So I think people are not yet comfortable in terms of the valuation of knowing which stock to buy and when to buy it. So I think there's a newness to it that I think will stop us, will end as we go along. So I think part of it is just being a new market. For it, so there's two taxation that you face indirectly as an investor, as far as income is concerned. So that dividend side. So as far as capital gains taxes, you still get capital gains tax if you're on ZSE, but if you're on VFX, as I said, there's no capital gains tax. There's a rate on VFX when you buy and sell. But what I'm talking about is every company that you are invested in, it has to pay profit first. Then after paying tax, the profit after tax is what it declares as dividend. Then there's a withholding tax on that dividend. But as far as the REIT is concerned, if that REIT declares 80% of its profit, not after tax, is before tax, if it declares its profit, 80% of its profit before tax as a dividend, then it's not taxed. And this is a requirement. If it doesn't declare that 80%, then it gets taxed like a normal company. So there's no discretion to management. If they don't do that, then it gets taxed as a normal company. So they have to declare 80% of their profit as dividend. So it's not after taxes, but there's no tax. If that makes sense.
All right. So you're saying the tax that they are not that is not levied is the company tax, is it? The corporate tax?
It's the corporate tax, yes. As long as that profit, 80% of it is declared as dividend.
I see. All right.
Yeah. So there's no discretion. Either you do that or you don't. As you know, tax doesn't give you discretion. You either do it or you don't, or you lose the benefit of not being taxed. Okay. Then in terms of warehouse modalities, the way you trade on the commodity exchange is that you trade through a warehouse receipt. So if you got in-house to sell on the commodities exchange, you bring them to a designated warehouse. And once you just get into a designated warehouse, they get then assessed what grade they are. Then you get a warehouse receipt, almost like a receipt says, you have put so much tonnage of this quality into this warehouse. That is then what you then sell on the stock market, and that's what on the commodities exchange. That's what someone buys. So if someone then buys that warehouse receipt from you, they can then take that warehouse receipt to the warehouse and collect those minerals. If that makes sense.
Okay. Yeah, maybe just to follow up on that, Mr. Bgoni. So how will that play out in view of the fact that some of our minerals can only be sold through the Minerals Marketing Corporation? How will that play out? Because now this looks like mining houses are being permitted to trade directly.
Okay, so we are doing this in partnership with the Minerals Marketing Corporation. So we're in partnership with them. So they are the ones who allow for this. So I think in terms of probability, we believe that the probability is much higher if a company is listed on the stock market to continue. I mean, the example that people always give is a company like Mekos. Mekos is still owned by the Mekos family and has been around for hundreds of years. And being listed in the Mekos family, yes, there are one or two that are still involved in the operation, but it's mainly a professional company now. And the benefits of the descendants of the family is that they get dividends throughout the years. So that helps quite a lot. And it's been seen all over the world. And it's been a pity. I mean, we know a lot of black-owned businesses that were very popular without giving names, but we know them. And a lot of them, when the owner died with the business. So we really believe that the probability is much higher. And some of the black business caught up on this and now have listed their companies. Because when you're a listed company, it's easier for you to hire professional managers. And also the corporate governance that comes around being a listed company helps the descendants of the family in terms of making sure that things are going well the way they should be. So we believe that the probability for a family company is much better if it's listed than it's not listed. And there's a lot of examples of black businesses that were very big in their time that are not allowed anymore, which we believe would be if they'd been listed. Okay, all right. Okay, so I'll start with the first one in terms of the usage of local currency. I think we have been complimenting the government in that regard. We have, if you notice, ZSE is a local currency exchange exclusively, and our intention is to stay that way. So whether the US use goes away or not, for us as far as the ZSE is concerned, there should be no challenge at all in that regard, because it's a pure ZW play. There's no multi-currency on ZSE. So I think we've supported and promoted the use of local currency that way. As far as VFX is concerned, as I said, VFX for us is going to be part of the International Financial Center. And if you notice, the International Financial Center is a place where you have different rules from the rest of the economy. So our belief is that that is a continuous, is an area where the government is going to use to attract foreign investment over a long period of time. That's why you have an International Financial Center. So in our minds, that's completely different. Won't be affected through the local use of the stopping of the use of the US dollar. That's completely different in our minds. Securitization. No, we don't have securitized credit on our exchanges. We have worked very hard in terms of making our exchange sophisticated. If you notice, 3-4 years ago, all we had was equities, and now we have ETFs. We now have REITs. We're about to have mineral commodities exchange. We're about to have CFDs. So we are constantly working towards making our exchange more sophisticated. So we will get there one day. But if someone has an interest in terms of securitization of assets, you can approach us. It's something that we can work together to launch earlier in the market. So if we get that there's something that someone has put a passion and expertise in, and that there's interest in the economy for that to happen, we will accelerate our plans. But I think at the moment, with the plan that we have, that we are rolling out, that we believe will help, that is required by our customers and the country as well, that we are rolling out. But if someone believes that there's other project that we need to do, they can they're free to approach us and we can discuss. Okay, thanks. Okay, all right. So, okay. So in terms of, in terms of the objective, when you want something to be more successful than it is, you would want more listings than what we have. You'd want more money raised than what we have. But in terms of compared to what has happened on the VFX and what happened on ZSE. So the main reason why we wanted to do VFX, there are quite a few, but we were worried that as the capital markets, we were dying. There were very few new listings coming across, very few. And also people are not raising money as well on the exchange. Because you want the exchange to keep on growing. You expect delistings. There's no exchange that doesn't have delistings. But you want a net increase where there's more listings than delistings. And we're quite comfortable that there's been new listings on VFX that we don't think would have come through if it was on ZSE. The examples being Caro, Caledonia, and stuff like that. So those ones we don't believe they would have come on ZSE, but they came on VFX. And those ones also raised money. So I think on VFX we raised about $60 million US thereabout. But there was a time where there was no capital raise at all on ZSE for a while, and there was no new. And we're looking at our pipeline as well. So my job is to look for new listings. I mean, that's what I lose sleep over. And it's been the first time in a long time where we get people approaching us to list. That seldom happened when it was on ZSE. So we're quite comfortable in terms of the growth of the capital markets. That has helped quite a lot, the VFX side. In terms of foreign investment is down across the whole of Africa. I don't want to say but I know that across Africa, foreign investment is down. Kenya, Nigeria, South Africa, Egypt. There's an association of stock exchanges, so we talk to each other. So it's down on everyone. So that foreign investment is down in Zimbabwe. What we are not happy about it, we are not unique in that regard. Of course, we've got our own challenges in terms of attracting foreign investment, in terms of perceived country risk. But across Africa, there has been a struggle in terms of attracting foreign investment. And we're quite happy that when Caro listed, there was a significant foreign investment that came in through that bond. So I think we're quite happy. But in terms of, I don't have the exact numbers with me in terms of foreign investment on ZSE, but we know that definitely it's down compared to historical, and also it's on its way down. And it's not just us, as I said. Kenya had a huge outflow last year, same as South Africa, Nigeria, as I said, Egypt as well. So we are not unique in that regard. So we're hoping that when it turns for everyone in Africa, it also turns for us as well. But we're quite happy that the Caro bond, when it got listed, there was a significant foreign investment that came in with that bond raising. So for us, as I said, meeting the objectives of VFX, that has helped. And as in terms of the currency issue, as I said, for us, VFX is not aimed at the local economy, for better word. It's part of the offshore center where there will be fewer exchange control regulations, better tax incentives. So the government has quite a lot of thrust in terms of creating an offshore financial center. Botswana has one, Mauritius has one, and we believe that as Zimbabwe, that would help very much if we had our own offshore center to attract investment. So I think I look at it completely different. That's why for us, ZSE, we've always maintained it as thanks very much on that one. That is a fair criticism, and I accept that fully. And our listed companies try very hard they don't like delaying financials. It's pressure for everyone. But the truth of the matter is we have challenges in the country at the moment in terms of reporting. It's something that maybe we are not honest about. So in terms of reporting, we are not the regulator of the reporting side. PAP/ICAS are the regulator in terms of that. But we are struggling at the moment. I'll just give one example that we are all struggling with. So in terms of hyperinflation numbers, you need an index, and normally you use the CPI that comes from government. But the government at the moment does not do ZWL CPI. They do a blended CPI, but you can't use that for ZW numbers because the currency that is being hyperinflated is ZW, not the US dollar. So you can't use the blended CPI. So because of that, we have a struggle in terms of producing financials because there is no indices that is generally accepted to produce hyperinflation numbers. So these are sort of the challenges that listed companies face and make it difficult for them to issue financials. So it's a fair criticism. I take it is something that we are working hard towards make sure that the delay doesn't happen. But sometimes circumstances beyond our control happen as well. There's also issues in terms of I don't like criticizing people in public, but there's also issues in terms of manpower, responsiveness of audit companies. The audit companies also say there's an issue in terms of manpower of listed companies as well. So there's an issue in terms of responsiveness and manpower as well that is on both sides. But sometimes the circumstances beyond control, like the issue I'm talking about, of which CPI to use to produce hyperinflating numbers. There's no generally accepted way of doing it. So in terms of sustainability, if you notice, we've been doing quite a lot of training in terms of sustainability, especially this year and a bit of last year. My understanding is that sustainability reporting becomes mandatory from next year. So it's something that we are expecting our listed companies to do, and we continue providing training in terms of sustainability reporting. We have to be part of the wider world. And I think it's important that we do sustainability. I think there are two new related products that we are thinking about. I didn't talk about them here because we haven't done enough work on them, but it's something that we are looking to, that we are considering for next year. I think the first one will be green finance or green bonds. We intend to launch a framework of green bonds for next year. And the way we like doing our new things is we like to do it with somebody else. So we like saying we've got a framework. This is a company that's going to list. So we are talking to one or two banks who could issue green bonds. I like banks issuing green bonds because when they issue bonds, then they finance green initiatives. So we're hoping to get one or two banks across the line and then publish the framework around green bonds at the same time. So that's one thing. The other thing that we are looking at is carbon credit trading. Is something that we are considering as well. We are talking to one or two foreign partners in terms of being able to do carbon credit. But at the moment, I think it's an area where there's still a bit of confusion of what's going to happen around it. So hopefully there's clarity that comes out of that will enable us to doing it. So besides the sustainability reporting, there's two new products that we are hoping to bring in the very near future in terms of sustainability. So I think that's what we're doing.